Good morning, ladies and gentlemen. What's up, traders? What's going on? Welcome back and happy hump day, baby. My favorite freaking day of the week, because I get to scream hump day. And now you guys are awake because Josh is yelling through your speakers. So hit me with a big ol' good morning, everybody inside of Zoom, inside of chat. Who do we got inside of chat today? Who is ready to rock and roll? Who is ready to make it happen? Because I'm excited for today, guys. We got some big moves in the market. We got a lot of things moving on down. You got Tesla moving on down. You got Google moving down. The SPY and the Qs gapping down pretty big. I think today is going to be a big day in the market. So inside of chat, hit me with a big old good morning. And if you're feeling up to it inside of the Zoom, feel free to open your mic and hit everybody with a big old good morning as well.
Good morning.
That's what I'm freaking talking about. Julie, good morning. Bringing the energy this morning. I love it. And then we got a full house today. Eric and Steve and Jonathan, J-Dub, John, Patrick, Steve, Catherine, everybody inside of chat. And honestly, my chat's all jacked up right now. It was showing every message from yesterday. So let's go ahead and just refresh that. Go ahead and click this button here. Little whoop whoop, little refresh. And now we can hit everybody with a big old good morning as well. So again, let's do a quick little mic check, audio check before we dive into it, just to make sure we are all good. And it looks like we're good. You guys can hear me. You're saying good morning. Awesome. So let's dive right into it, guys. We have a lot to discuss today, and I want to make sure that we take this time to get you prepared so you guys are all set, ready to rock and roll. So let's officially start the pre-market rundown. And before we dive into it, if there are any stocks that you want to have reviewed for today, make sure that you post them in the Market Mastery room if you are in the Market Mastery program. We will prioritize those. We will look at those and make sure you guys are all set. And then after that, I will go through the trade floor and look at other stocks requested to have reviewed. And again, if we have time, review those and make sure you guys are all set. All right, so make sure you guys do that. But as always, let's start with the economic calendar and let's talk about what we got going on for today's trading session. So coming on up after market open, we have only about three pieces of data, one event to be mindful of today. So here coming on up after market open at 9:45, we do have S&P Global Composite PMI Flash, Global Manufacturing, and Global Services PMI data set to be released here at 9:45. Now, that is definitely the type of data that we've seen move the market. So 9:45, be mindful. We got some key data coming on up, right? Then here at 10 o'clock, we got some low important data. It's new home sales data, not really the type of data that really rocks and really moves the market. But again, more data to be mindful of that's set to be released here at 10 o'clock, right? 10:30, we have EIA crude oil stocks change. Again, this really isn't the type of data that the market really reacts to, okay? Other than that, after market close today, we do have Fed Bowman speaking after market close. So really the main key, most important pieces of data to be mindful of today that we can see make an impact in the market is going to be S&P Global Composite, Manufacturing and Services PMI data that's set to be released here at 9:45. Other than that, we're pretty much in the clear. Just be mindful of new home sales data at 10, and then EIA crude oil stocks change here at 10:30. All right, so right into the SPY. We're going to break down the SPY, talk about what we got going on for today. We'll definitely be reviewing the Qs as always. We'll be taking a look at Tesla, and we will be taking a look at Goog, as well as these two stocks are moving on down after earnings last night. And speaking of earnings, what do we have coming on up on the earnings calendar for tonight? So if you guys are new to the community, over on the left-hand side, you can go over to the market data section, click on weekly earnings, and that's going to show you all of the most anticipated earnings reports set for the week. So if we take a look at this tonight, we have Chipotle, we have Ford, and we have IBM set to be released tonight. Okay, and if you want to see all of the earnings reports, not just the most anticipated, go over to market data, go to where it says stock earnings, and that's going to show you every stock that's released earnings. It'll even let you see a transcript of that earnings report as well. Now, if this is your first time getting into the market data section, sometimes the first time takes like 5 seconds to really pull this data because it's real-time market data that's coming to you in real time. The first time accessing this, it may take like 5-10 seconds to load. Then you're pretty much good. But it'll show you every single stock that's reported earnings. It'll even let you see a quick little transcript of that earnings report as well. So check that out, guys, if you want. But other than that, we got a couple earnings being set to release tonight. Again, that's going to be IBM, Chipotle, and Ford for those of you that like trading earnings. All right, so let's start with the SPY. Let's discuss what we got going on for today and really discuss my expectations. What do I think can happen? And what are my plans to take advantage of the opportunity here for today, right? So as always, we start with the daily. We do top-down analysis all the way down into our lower time frames. We build those plans to get prepared for the day. So a couple key areas that I want you guys to go ahead and get marked up. Number one, this zone up here between 553.29 to 553.77. Yesterday's low of day, yesterday's close. The reason I have that level marked on up is if we see the SPY bounce today, what could we potentially do? We may come up and close that gap into yesterday's low and close, and that may provide us with a gap fill rejection opportunity. So since we're seeing a pretty big gap down today, I want to go ahead and look at yesterday's low and close and go ahead and just mark that up with a zone. Because who knows, maybe today or tomorrow we come up and fill this gap and it provides us with some kind of opportunity inside of this gap if one's created. But we are having a gap down today, so go ahead and just mark up yesterday's low and yesterday's close. First zone. Right, next zone is going to be the zone right here between 550.13 and 550.44. Previous all-time high resistance, followed by a retest as support last Thursday. So that's going to be a pretty key zone here for today on the SPY. That's between 550.13 to 550.44. Then we're going to work our way down a little bit lower, and we don't really have this zone. You can't really see this zone. Really, all you can do is just mark up this candle's low of day from last Friday, and that's at 547.93. But then what can you do? You can go down into your lower time frames, a 4-hour, a 1-hour, a 5-minute, and look left over the past few weeks and see, is there actually a key zone around this level of 547.93? And there is. So let me go ahead and put that zone back. You guys can see that I went ahead and started on the daily by marking up right? That low from last Friday. Then I've gone down into my 5-minute time frame, looking at that level that I have, and I'm trying to see, is there a actual zone, a key zone, a significant zone that could be respected, right? Versus just that standard line off Friday's low of day. So I go all the way back as far as possible, and I'm really using Friday's low of day as a reference point to try and identify key zones over the past few weeks. And hey, there is a pretty key zone here between 547.89 to 548.19, right? So if we go all the way back to June, now we're in June 18th, we see that we had a lot of resistance near, right, Friday's low of day, that line that we just threw up. Now we're going back a few weeks and we're looking at that level and we're trying to find a zone around that level, using that level as a reference point. So I can see that there's a lot of resistance here in this region from June 18th, a lot of resistance here from June 17th. We cracked that zone and retested that zone here on June 20th. Okay, so we see multiple touch points, and we've been able to identify a zone utilizing last Friday's low of day as a reference point, right? Then coming, here closer to the current date, we can see that we respected the zone again. We cracked below it here on June 28th, retested it, and then flushed to the downside, right? We came up here, hit it several times as resistance on July 2nd. Then we saw it turn into support, right? So I can see that that zone has multiple touch points in it. And again, right off last Friday's low of day, and that zone is even still valid from last Friday's price action down there around that low of day. So again, starting on the daily, we don't have a zone that really stands out that we can identify. All we see is we have that low of day from Friday, and that low of day really stands out to us. So from there, just go ahead and mark up Friday's low of day. You can just leave it at that. 547.92 could be your level, but I personally like to identify key significant zones. So the only way to do that is to go down into your lower time frames. And what I did is I went down into a 5-minute time frame, utilizing Friday's low of day as a reference point, and then building a zone around that reference point until I feel pretty confident that I have a key zone identified. And I do have a key zone identified, and we just walked through that process. So that's how I identified the zone between 547.89 to 548.19. All right, so hopefully that makes sense. Now let me back up and remove all my little circles here. Pop, pop, pop. All right, cool. So that's going to be your next zone here on the SPY. Again, that's between 547.89 to 548.19. Right? Then from there, right, look left. Where could we go? Right? Where is the next area of support in this region? Well, the most obvious area is going to be way down here up against all of these lows, right? So the next zone that we have here on the SPY is going to be down here between 542.65 to 543.03. Now, these are all of the most key, most significant zones of support resistance to be watching and looking at for today. So we have all of our key zones identified. Now we drill back down into our lower time frame, the 5-minute, and we start building some hypothetical plans. What if the SPY goes up to one of these zones? What would we do? All right, what if the SPY comes down to one of these zones? What would we do? And then really look at these zones and assess the significance of these zones. I like to do that. On a scale of 1 to 10, how significant is the zone? For example, let's say it's a 2. On a scale of 1 to 10, how significant is this zone right here? I would say it's a 9. On a scale of 1 to 10, how significant is this zone? It's an 8. I like to assess the significance of my zones to see which ones are more significant than others. And then from there, also see, do we have any key make or break levels for today? For example, if we break this zone right here that I've assessed is a 9 as far as significant goes, right? Could this be a key make or break for the SPY today? I think so. If we break above this zone, we could definitely get up to yesterday's low day and close to close the gap. If we stay below that zone, there's a lot of downside. So I can see that that zone is a key significant zone. And if we get above it, there could be a lot of good action to the upside. If we stay below it, we could see even more downside. It's a make or break level for the SPY. So not only is that a very significant zone, it's also a make or break, in my opinion, for the SPY today. That's going to be my line in the sand. Okay, so I've got all of my zones established, right? I've rated the significance of these zones, and I've been able to identify one zone that really stands out to me. That's going to be my line in the sand for today, my key make or break. Something's bound to happen at that zone. Okay, so let's go ahead and start building plans now that we've done all of our analysis. So plan number one, let's say the SPY comes up to that line in the sand and we hit it, can't get above it. We stay below it as resistance. It's such a key significant level that I would believe we would see a nice move away to the downside from that key level. So that would be an area where I would get short. So plan number one, if the SPY opens and pushes up into that line in the sand zone between 550.13 and 550.44, and we hit it, get rejected, and stay below it, I would be looking to get short. Where to? My next daily zone of support, which is down between 547.89 to 548.19. That is going to be game plan, GP, number one. All right, looking to get short off that line in the sand if we stay below it down into our next daily zone of support, right? What's another game plan that we can build? An opposite plan, right? To remove bias. We just built a short plan off that line in the sand. Let's build a long plan. What if the SPY comes up and gets above that level, pulls back into it, and holds it as proper intraday support, right? What would I want to do if that's what I see take place? I would want to get long and play calls. Where to? My next key daily zone of resistance, which is up against yesterday's low of day and close between 553.29 to 553.77. So that's going to be game plan number two. Would be getting long if we break that key zone, which is our line in the sand, and if we pull back and hold it as support. I would look to get long, expecting to see some upside in the market into yesterday's low of day and close. That's going to be game plan number two. Now let's build the other two game plans and then move on to the Qs, right? So game plan number three, if we come down to this key zone of support and hold it, I would simply look to get long. So game plan number three, if we come down to this 547.89 to 548.19 level and hold it as support, I will get long into that line in the sand zone as my first PT. Okay, so that's the long plan. Pretty simple stuff, right? And then our fourth and final plan is if we come below this zone, let's say we crack it just to come up and retest it and stay below it as resistance, and we see a crack and retest off that key daily zone. That would be something that really stands out to me that suggests there's going to be some downside, and I would want to look to play puts to the downside. Where to? Our next daily zone of support, which is all the way down between 542.65 to 543.03, right? And that's going to be our fourth and final plan today here for the SPY. So you got a total of 4 plans, 2 plans off that line in the sand, 2 plans off that lower level of support. It really just depends, what is the SPY going to do if and when we get to one of these levels, right? These are key significant levels. We have 4 plans built around these levels, right? We just need one of the 4 things to present themselves, to show up, to present an opportunity. And we can take the trade that we're confident in. We can trade from zone to zone. Keep it super simple. Makes it good profits today, right? So that is going to be the breakdown on the SPY. And those are your 4 plans for today. All right, moving on to the Qs, right? We won't be as thorough with the Qs, but you guys get the gist of how we're identifying these zones, how we're building our plans to get prepared. All right, so the Qs, we got a line in the sand between 473.96 to 474.45. That is our key make or break for today. That's our line in the sand, okay? Other than that, key resistance to the upside is all the way up between 480.18 and 480.63. So we have a pretty large opening from that key line in the sand all the way up into our next key zone of resistance here on QQQ, okay? And then down below this line in the sand, we do have this daily gap that could get filled. right? So we do have this big daily gap here on QQQ between 468.16 up to this 471.26. We can see that we have this big daily gap, okay? And that gap could get filled today. So let's go ahead and build a couple plans. Plan number 1 is the Q's open below that key line in the sand. We push up into it, reject off of it as intraday resistance, and we see it rolling on over, and we have a clear short opportunity presenting itself off that key level of resistance. That would be something that I would want to get short on, right? And look to play puts on down to the top end of this gap at 471.26. And then if we fall inside of this gap and stay inside of the gap, I would continue to hold this down to the lower end of that daily gap, which is going to be at 468.16. That's plan number 1. If we open below that line in the sand, push up into it, get rejected, I would be looking to play puts down into those lower gap levels. Game plan number 1. Game plan number 2 is if we see the Qs getting back above that level, regaining it as support, and we stay above it as key intraday support, I would look to play that long, expecting, hey, we could see some upside. Where's our main target to the upside? All the way back up to that 480.18 to 480.63 zone. That's going to be game plan number 2 if we get above the line in the sand and we hold above it as intraday support. I would feel pretty confident to look to play this long all the way back up to that top zone. Now, are there going to be pit stops along the way up? Profit target levels before we get to that 480 zone? Absolutely. Look left, right? Look at last Thursday's lows. That'll be PT number 1. Look at Monday's lows. That'll be PT number 2. And then all the way up to our main PT, which is up there in the 480s. So first target would have to be like 476.73. Second target would be up at 477.86. And then we can see it up to that zone that's right at 480. So yes, there will be some pit stops along the way up. There will be areas where you need to take profit, but your main target that we could realistically get to is way up there, right at 480. That's the breakdown. That's the game plan here on QQQ for today. Tesla gapping down about what, 8% off earnings, I believe. Pretty sharp decline here on Tesla. And there's really only 2 things that I want to watch today, right? The 2 gaps on Tesla. And we're actually inside between, not inside, we're in between 2 of these gaps. You got a gap to the upside, you got a gap to the downside. And we could look to trade off of these gaps and inside of these gaps here on Tesla today. So the first gap you have is to the upside, which is between 231.41 to 233.16. Okay, then your gap to the downside is down here between 213.22 to 218.06. And if we look at Tesla on a 5-minute, we're in between both of these gaps. So it's pretty simple as far as the plans go. Plan number 1, let's say Tesla opens, pushes up, and then fills this gap to the upside. What could we do? We could potentially look to get short for a gap fill rejection. So if Tesla opens below the gap, which it looks like we're going to, we push up and fill that gap, and we stay below 233.16, we may have a really nice short opportunity presenting itself to get short for a daily gap fill rejection. That's trade plan number 1. Trade plan number 2 is a daily gap fill short. So let's say Tesla opens and just comes all the way down and eventually gets below 218.06, and we stay below 218.06. I would then look to take Tesla short down to the lower end of that gap for a gap fill. That puts you at 213.22. So you could potentially get 5 points of downside just for the gap fill, which is awesome. That's game plan number 2. And then game plan number 3 is going to be a gap fill bounce. So let's say Tesla comes down, you don't take your gap fill short, but we do see Tesla down at 213.22 today, maybe tomorrow, maybe Friday. Who knows? But if we ever see Tesla coming down and filling that gap at 213.22 and we stay above 213.22, what could we do? We could look to get long for a gap fill bounce opportunity back up to that 218.06. So that's going to be game plan number 3 on Tesla, would be the gap fill bounce. Now, these are game plans for today. These opportunities could present themselves. They could set up. But if Tesla sits sideways today, I still want to watch Tesla tomorrow and Friday and next week. As we're inside of these gaps, okay, we're not inside of the gaps. As we're in between 2 of these gaps, at some point in the future, very near future, we could have really nice trading opportunity presenting itself off of these gaps, regardless of it being today, regardless of it being next week, right? We could see really good trade opportunity to the short side and to the long side off of these daily gaps. And we're in between both of them right now. So not only do I want to watch Tesla today, I want to continue to watch it until we see opportunity presenting itself off one of these 2 gaps, whether it's to the upside, whether it's to the downside. These gaps could get filled. We could see nice reactions away from the gap fills, and that could provide us with some really awesome opportunity to lock in some amazing profits on Tesla. So Tesla staying on the watch list until we actually invalidate these gaps. We move past these gaps, and that's no longer valid. Right, so Tesla's going to be on watch for a while. And then lastly, Google. We're coming down to a pretty key area of support. This is a riskier trading opportunity for today, so I want to stress that. I'm just looking for a bounce play on Google. Looking for maybe a dip buy bounce play off a key daily level of support here on GOOG. And that key daily level of support that I think we could see a nice bounce play off of is down between 173.24 to 173.48. So if we see Google open and we just come straight down, I mean, when I say straight down, I'm literally saying just straight down, right into that zone, and we hit it to the penny and we see a reaction, I want to get long for a dip buy. We could definitely dump on down into that key zone. We would be very overextended to the downside into that key zone, and we could see a nice pop. We could see buyers step in off that key level of support and see a nice dip buy, see a nice bounce play opportunity, and catch $1 to $2 of the upside. So definitely want to keep GOOG on watch to see if we do open and dump straight down into that zone and see if we get a reaction. If so, I want to be looking to play that long for a possible dip buy opportunity, which is a quick scalp. We're looking to get maybe a couple of bucks out of this move for a quick day trade scalp opportunity off that key lower zone of support. And again, we're just looking for a dip buy. And I stress, why they're riskier. Because again, it's just one reason to take a trade. It's coming straight down. It's a falling knife into a key level of support. And you're looking to catch that falling knife for a dip buy. It's risky because you're trying to catch the falling knife. Sometimes you catch it by the blade and you get burnt. If you don't know how to manage your risk properly, if you're having a hard time assessing position to make sure you're mitigating your risk, that's why these trades can be risky and not for the faint of heart if you don't have the experience around risk management, how to get positioned, and how to execute quickly and flawlessly, because these are quick trades, they're riskier trades. So I want to stress that. But it's something that I'm looking to take advantage of today if the opportunity presents itself. All right. So you guys are all set with Goog, right? You got your game plans on Tesla, and we are dialed the in. I almost cursed. I had to watch my F word. As my daughter would say, fudger, right? We're dialed the fudge in, right? On the spine to Qs. We're all set, ready to rock and roll. We're going to have an amazing day. We're going to crush it. And if the market allows us, we're going to make some great profits, guys. All right. So let's see if there's any other stocks that you guys want to have reviewed for today. Market Mastery chat room. What do we got? La 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 la. What do we got up in here? All right. So Delta Airlines, the doll. Yeah, Steve, I agree. Yeah, coming down near a key demand zone, up against that 200-day moving average, for sure. Yeah, I mean, at first glance, I could definitely see that coming down into that can't even talk, that key demand zone. You got a little bit of that daily fair value gap that you're coming into as of yesterday. Don't really like that fair value gap, but you're coming up against the 200-day moving average, which is in line with that demand zone. For sure, you can see a nice push out of that zone off that 200 SMA. Start to see some upside. Is there anything else that really stands out with Delta? And I mean, honestly, it does. Not only are we coming to the 200 SMA, coming into that demand zone, we just look at some basic areas of support resistance. We had this nice daily breakout through this zone of resistance. This is the first time we've come back to retest it as support. So that's another confluence, is you're coming back into some pretty obvious, pretty clear previous support resistance that could be valid again. And that's also in line with all the other analysis that you've done so far. Lastly, I would start running some fibs, maybe from swing low to swing high. And we also see it's coming down to that 61.8 retracement. From the swing low up to that swing high, you also have confluence with that 61.8 retracement, right? Then if we take that fib down to that swing low, we also get confluence with our 50%. So if you go from that swing low to the swing high, you got your 61.8 retracement. If you do the full move from swing low to swing high, it puts you at the 50%. This is solid, man. You're coming down into some key demand, coming down into key support. You're pulling back to that 50% retracement or the 61.8, depending on how you run it, into that 200-day moving average. You just came down into oversold territory on the RSI and popped out of it. And there's a lot going for this. There's a lot of confluence. There's a lot of things that suggest we very realistically could start to see some nice upside here on DAO. 100%. I mean, I agree. I think there's definitely some opportunity here for a possible swing trade to the long side. 100%. I like it. Coin? Yeah, let's look at coin. We got about a minute, so we'll have to blitz through coin. And I say we'll have to blitz through coin because I actually have a swing trade on the SPY from yesterday based on the analysis that we had. Fair value gap into resistance off that 50% retracement. I did get short yesterday for a swing trade on the SPY. These are going to be opening in the money. And so when the market opens literally in the next 30 seconds, I want to be able to manage my trade and take profit because the implied open, they're like 4 to 5K on the options. So I definitely want to be in a position to start scaling out right at market open here on those SPY puts. So let's let the market open real quick. Let me manage my trade. All right. And then we'll go take a look at coin. Ryan. So market to be open in 3, 2, 1. Nice profit on the SPY. If I can, take some profit, that'd be great. And then hold a runner. If I can get my position box to load up. We're going to sell. Let's go ahead and close 75% of the position and leave the other 25% run. Just trying to manage the trade. Give me 1 second, guys. I'm trying to get an order off the table here. All right, cool. I got 75% of that position closed. And I'm going to hold the other 5% as a runner to see if we do get some more downside here in the market. Give me 1 sec. All right, we're good. And then we'll go take a look at coin. Okay, I'm going to let a little bit of this run to see if we get below 548 and maybe work ourselves a little bit lower here today. But massive gap down. Those contracts printed big time. I got to close some of that out. But let's go look at coin. You had Google put as well as Google. Close both at the open. Nice, bro. Nice. Good stuff.